Mm-hmm. Mm-hmm. Hello. Hey, first off, cue that wind effect. Bring it in. Yes, sir. All right, guys. Just getting down to it. Obviously, as we said, it was a unaction-packed day for our sweet little stock to AMC. But like I was saying yesterday, guys, we're under full algo suppression. And this is only letting me know further that we are closer and closer to a pop. I got some keynotes here after these a couple videos. I got a video here, and then I got to show y'all another clip of something. Just where I keep screaming about Tesla, NVIDIA, get your XRP, H-bar, Microsoft, guys. This AI thing is coming quicker than goddamn. I don't even know what I could feel it behind that. That wouldn't be just totally horrendous. So we'll just leave it there. All right, let's jump down in this clip.
Would likely be the conditions.
Fox Business Alert, we already know that the markets are betting heavily on the Federal Reserve pausing its interest rate hike cycle at the June meeting, the next one. But I don't know, can we punch up the very latest Fed funds predictions for 1st July? Okay, futures market now sees about a 40% chance for a quarter point cut in July. But when you flip it to September and that meeting, 28% of the nearly 80% who think we will see a second cut after July are betting it will be a 50 basis point cut. So 0.5%.
You know, it's just really crazy to me, guys. Why is it like there's a sentiment that they've halted inflation? He dropped that 0.25. We were talking about people were talking about halts. They're skipping the cuts. But Jay Powell has not changed his opinion that he's got to drop another interest rate. It's like the market is just setting up to get devastated, or the market makers and market runners are setting up to get devastated, because this is not a cleared up situation yet. Talking about cuts like things are fixed. What? Hello, the dollar, 37 trillion. We're going to a debt ceiling. How are we cutting? Going with we're in a couple of days left for them to have to lift the debt ceiling before we start missing out on payments that we owe the country of the United States. How we cutting interest rates at that? Hey, somebody let me in on it.
Minneapolis Federal Reserve Bank President Neil Kashkari dumping cold Gatorade on that idea today. Kashkari, a voting member, we remind you, said inflation is too high and, quote, I am now on the more hawkish end of the Fed policy spectrum.
But what's his name? Kashkari. I don't know how to say. Kashkari, listen. Thank you.
The biggest voices on the street.
It's got to be someone with a bald head that has some common sense.
Chief investment strategist Liz Ann Saunders. I don't know, Liz Ann, what do you think? You know, is this growing bet on a rate cut another fever dream by futures traders?
Well, I would say to those betting that way, be careful what you wish for, because I think the conditions that would support not just a pause, but a pivot in fairly short order to rate cuts would be pretty horrific conditions. This idea that all else equal, meaning not much change in inflation, which is nowhere near the Fed's target, no major disruptions, at least yet, in the labor market or more broadly in the economy. I just don't see the conditions under which the Fed will pivot to cuts. If it happens,
at least they'd be honest,
it's probably because of something much more serious erupting within the economy, most specifically within the labor market, or the banking system problems turn into something a bit more systemic. Absent that, I think pause is the MO for the Fed for the foreseeable future.
So you would have to see somewhat of a black swan or at least a duckling of sorts before you'd even expect to see a 25 basis point cut.
Well, this idea that they would start cutting without inflation anywhere near their target, but absent any turmoil in their other official
I just said this. Okay, listen. I knew I wasn't crazy. I was like, what?
Mandate, which is the labor market.
It's like a fire blowing up behind them. They're like, yeah, everything's good. Yeah. We're fine now. Everything's good. Fires are literally in flames, burning everything behind them.
In the meantime, what they're showing is that they think of the rate tool as the inflation tackling tool. And I think a pause. I think the May meeting was probably the final hike, at least for now. And then their macroprudential tools, inclusive of things like the Bank Term Funding Facility that they put in place in the immediate aftermath of SVB. Sure. I think that's how they could potentially tackle ongoing stresses in the banking system and think of those tools as somewhat distinct.
And of course, the FDIC has
Walt
proposed
Disney's getting
that
rocked.
there is an increase in what they expect
But that's
to
because
get
of something
from
else.
fees as far as the big banks are concerned, as they pay
political.
into kind of refill the coffers of the FDIC and what they had to spend to kind of rescue all of the depositors for Silicon Valley Bank, Signature, et cetera. Monetary policy, let's see where it is going, because when you look at inflation, yes, today we got PPIs pretty much in line, but year over year, consumer inflation, 5.5%, and that was core. It feels like it's still sticky. In that scenario, are there areas in the market that look decent?
These people act like they don't go out to Publix.
Well,
you seen the price of eggs?
I wouldn't say areas maybe in the way people traditionally think of areas, which tends to be more at the sector level. I think factor orientation makes more sense right now than monolithic sector calls. And tied into the macro environment in particular, what's sort of dear or missing in the macro environment is the way to think about which factors, another word for characteristics, make sense. So most aggressive tightening cycle in 40 years. That's starting obviously to put strains on companies that don't have the cash flow to either fund their operations or even pay interest on debt. So you want to look for ample interest coverage. Obviously, stronger balance sheets of companies that have more cash, less debt. We're in a fairly weak forward earnings revision environment. Look for positive earnings revisions, positive earnings surprise, lower volatility. So there's sort of a quality wrapper around factors. And I think that's a better way to approach this kind of market, especially with correlations coming down, than just trying to make a blanket, overweight, underweight sector call or two, which is going to, in some cases, load you up with some great stocks and some not so great stocks. So focus more on factors than sectors.
And before we go, after
AKA companies with high pricing power, high earning, and then are going to be companies of the future. I'm just telling you, I'm not saying anything but truth over here.
For the next meeting, which is in June, how do you think the markets react?
I don't know. I think it depends on what else is going on.
Because everybody says they're going to rip higher.
Well, first of all, I really take issue with what I hear often, which is usually has the word typical in it. The market typically does. Right. And I just put a column in the Financial Times that got posted online today about just this issue. 14 rate hike cycles in the history of the S&P back to the late 20s. And the range of outcomes around that final rate hike, in fact, if you look a year out from the final rate hike, you're talking about a range of down more than 30% to up more than 30%.
Kind of
so shame on anyone that says typical or average, because it's a small sample size with a gigantic range. And there's so many other factors that come into play. The spread between the final hike and the first cut.
Sure.
Even there, what's the reason for the first cut? Is it financial crisis type situation? Or if it's a really benign soft landing like 1995, where you were also in the midst of the blowing up of the internet bubble. So every outcome is different. Yeah. I'll go back in saying that I think if it does look like the Fed is going to cut in short order, given what would likely be the conditions supporting that, that would be, I think, a risk factor, clearly, for the market.
Interesting.
Yeah, she shouted straight. She shouted straight as peas.
To the beat of always her own drum. Yeah, it's like chaos theory with Jeff Goldblum in Jurassic Park, where he says, you think that the drop of water is going to go this way, but then it doesn't. Thank you, Liz Ann.
Thanks, Liz. Good to see you.
All right, guys. Just a feeling, like I said, the terrain is getting insane. Like I said, everybody's clearly seeing. We've already been seeing this from retail sector. Y'all already see the expenses of how much it costs to live outside and do day-to-day things. But we're on the verge of possible default. I'm just going to see. There's no way that they're going to let this happen. But we're rolling in on those last days of this default. I'm thinking they're just trying to do this to get everybody riled up, because there's just no way they're about to let America default. If they do that, I mean, that's just. Whoo, we don't even want to talk about that discussion. We are staying right here in this because like I said, believe they're going to raise the price. I mean, they've done it 68 times since 40, I think they said. They're going to raise that ceiling. They just did that last. They're not about to, I don't really think that's going to occur. But filling in on AI and why I keep screaming about that Tesla and that NVIDIA and that Microsoft, guys, check out what happens if you are a server.
You're looking at Peanut, the robot server.
You know, it's doing a lot more than I expected, but it's very usable, very helpful.
Peanut has been working at Sushi Hana since late last year. Owner Sarah Lee says it's a big help because of how tough it is to find people.
Yeah, I noticed like a new generation, I will say. People doesn't really want to work the hard labor. Even the carrying the water.
According to the National Restaurant Association.
And just like that, Generation Z, you gave up everything to AI, just like that. You want to be lazy? It's over with.
60% of restaurant operators say they don't have enough workers to meet demand.
This is how AI slips straight in.
It's a hard thing for restaurants to hire consistent and good help. So that's been a problem.
Jung works with understaffed restaurants to help them find the right robot server.
Here comes the little Peanut, pretty and smart.
He says more places are looking to automated workers to fill the void.
Restaurants still have to have employees. They need to service their patrons and their guests. So they are looking for any kind of solution that works.
Peanut is responsible for bringing waters and plates to customers. Lee says it isn't advanced enough to do all of the work that a real server does.
But I don't think this one cannot replace the one-person human job yet.
But even the basic tasks Peanut handles lets other workers be more productive, bussing tables and making sure customers have what they need.
The staff can do the more stuff without, you know, running the 5-6 tables in once. They can just kind of taking care of the customer one by one.
You know, but a rolling cart is over with. People complain if they want to wipe the table.
Says the food service industry had 400,000 fewer employees at the end of last year than before the pandemic. In Linwood, Washington, Jake Alexis, Fox News.
Hey, y'all see it coming. Y'all see it coming. But guys, just tapping in quickly, rolling in our AMC play. Let me start off simply by saying this. I believe that we're on the verge of something coming. The sheer amount of algo trading is telling me that something is on the horizon. It's just getting too blatant. It is clear. Looking in, you can kind of just basically see we barcoded, still recovered down, guys. I want everybody to keep your heads or you mind yourself that we are 60 cents away from where we topped at. This is no big drop, nothing crazy for the amount of money they've expended on this, guys. But double tapping in here, looking in. Hold on 1 second. All right, just looking in here. Cost to borrow 193%. Utilization 100%. Days to cover they're showing is at 5. There's different things that are coming from FinTel. I don't really know about this too much, but I am noticing that the cost of borrow is rising, and I think we're sitting at 25 point. Let me see where it is right here. Let me see. Oh, that's not what I'm looking at. Here we are. Yep, 25.95% on shorting it. So we're going back up there again. We're teetering back close to that 26, rippling back going to 27 that I've been feeding for. Days of cover is sitting at 6 days, not 4. 6 days, and this through FinTel. Coming back around, which we saw earlier. Let me see. I think I had something else in there. Was it something else? No. It's just cost bar max. But looking in over here, guys, market cap still remains sitting up here. Now, this has been confirmed at Market Watch, TD, and on the NASDAQ of AMC's market cap being at $8.2 billion, which is well above where this $5 is trading from. Again, here we go with these glitches that always happen before there's some type of pop. But like I said, we're not calling it a glitch anymore. It's just simple facts of it. The market cap is, this is what the market cap is. Y'all got to understand that nobody's been selling. If anything, more people have been purchasing. There's been more rallying of people buying lately. I don't understand why, but it's just everybody is on the feeling, understanding that, hey, there's something teetering here and it's sparking up more interest. The market cap is showing higher than what the price is trading at. That just sums all the way back to what I'm telling you right here. Do not get lost in this mumbo jumbo, guys. You're on the brink. Hold steady. Clench down to your seatbelts. We're about to get jiggy with it, all right? That's what I came in. Just want to tap in and let everybody know what I was seeing, what I was identifying. And it all made sense because I was like, wait a minute. Look at the sheer amount of algos. The more that they have to let these algos trade, the worse of a position they are in. This is just blatant. Guys, we're barcoding almost 80% of the day. I know something's broken. Something's about to break. Stuff's about to break. Plus the economy's getting smoked. People left and right. Oh, yeah, they'll do a cut. They'll do a cut. They're not about to do a cut. They're about to hit y'all ass with another hike and send this thing caboots. Hey, man, listen. Y'all hold it down. Keep your head right. Keep your emotions in check. I'm telling you, we're getting close upon something. Hey, listen, tell me what y'all think about it. Guys, check out the description. Now is the time to start your run into crypto. Check out my crypto playlist. Go look at the ballot wallet view. And like I said, if you do want to get a ballot wallet, I feel like that's the best intro as a beginning cold storage. At the simplicity of being a physical wallet where you can hold it offline until you use it. And for the price point, $35, you can't beat that. If y'all want 5% off, check out the description. Guys, we about to bring it back in here tomorrow. Hey, much love to y'all boys. Hey. Yes, sir.